Okay, I'm here to talk about the changes in sales tax this year, and we all know that sales tax is the best tax, right? Okay, so our first change that we want to talk about is the ST1, which is the form that is used to to report and submit the Illinois sales tax. So this starts effective January 1st, 2026, and it would be due on February 20th. There's just a few changes. Okay, step 1, line A, has always been used to report the amount of alcoholic liquor purchased. New, we have a line B added, and it has been added to step 1 to report the taxable motor fuel receipts from the sale of motor fuel. Until January 1st, 2026, motor fuel was defined as all volatile and inflammable liquids produced, blended, or compounded for the purpose of, or which are suitable or practicable for operating motor vehicles. After January 1st, 2026, motor fuel was defined as all volatile and inflammable substances, whether in liquid or gaseous form, that are produced, blended, or compounded for the purpose of, or that are suitable or practicable for operating motor vehicles. Among other things, motor fuel includes special fuel and gasohol. If you made sales of motor fuel and reported these receipts on lines 4A, 6A, 8A, 12A, or 14A of Form ST1, you need to combine the total motor fuel receipts reported on these lines and enter them on Step 1, Line B. If you are not required to report your alcoholic liquor purchases or do not have any motor fuel receipts to report, go to Step 2 on the ST1. Our next change is in Step 3. So line 5A used to be for drugs, medical appliances, and groceries, but now it's going to be for drugs and medical appliances. So enter the portion of line 3 received from your sales of qualifying drugs and sales, leases, or rentals of qualifying medical appliances, plus the amount received from sales of qualifying drugs in performing your service and sales, leases, or rentals of qualifying medical appliances. Line 5B is the same. You multiply line 5A by the tax rate. You get the taxes due on the drugs and medical appliances. New, we have line 5C, grocery base. So you need to enter the portion of line 3 that you received from your sales of qualifying grocery items, plus the amount you received from sales of qualifying grocery items in performing your service. And then new, we have line 5D, so you need to multiply line 5C by the rate. In some areas, there may not be a rate, but others there will be. The next change we have on the ST1 is line 16A. And 16A you complete only if you sold items at the end of a lease that you purchased prior to January 1st, 2025, and you previously paid use tax either to your supplier or directly to the Department of Revenue on these items. Enter on line 16A the amount of use tax previously paid, but not to exceed the sales tax due on this return because you sold the item at the end of the lease. And then on Schedule A, which is page 2 of the ST1 and has the deductions, we have a new line 2B, and that's the taxes collected on groceries. So enter the amount of tax you collected on your retail sales of groceries and tax you collected on groceries sold in performing service. And those are the changes of the ST1, which if you're filing electronically will not be an issue, or should not be an issue. Well, next we want to talk about the elimination of the grocery tax charges. So effective January 1st, 2026, the state of Illinois will eliminate the 1% sales and use tax on grocery sales. This change will require all retailers to report their grocery sales differently on Form ST1, sales and use tax, and E911 surcharge return. So the question is the sale of Illinois' 1% tax changing for items that qualify as drugs or medical appliances? No. The state's 1% sales and use tax will continue to be imposed on items that meet the definition of qualifying drugs or medical appliances. And if you have questions, that's in the Administrative Code section 130.311. We also have this informational bulletin, which is FY 2026-03, Illinois grocery tax changes effective January 1st, 2026. It allows municipalities and counties to impose a local grocery tax rate of exactly 1% by ordinance. For a municipal or county grocery tax to take effect on January 1st, 2026, the municipality or county must have filed the ordinance with the Illinois Department of Revenue by October 1st, 2025, and the ordinance must be approved by the Department of Revenue. After the October 1st, 2025 date, ordinances may still be filed at any time, but the effective date depends on the filing deadline. So ordinances filed before April 1st take effect on July 1st of the same year. So for example, ordinances received after October 1st, 2025, but before April 1st, 2026, and approved by the Department of Revenue will take effect July 1st, 2026. Ordinances filed by October 1st take effect January 1st of the following year. Groceries authorized to be taxed at the 1% rate by municipalities and counties beginning January 1st, 2026 are identical to the qualified food items currently taxed under the state's 1% rate that is eliminated after December 31st, 2025. So even though there's an elimination of sales tax for groceries, the following items are still taxable at the high rate of the 6.25% plus. So alcoholic beverages, food infused with cannabis, soft drinks and candy, and food prepared for immediate consumption. They were always charged at the higher general merchandise tax rate. So prescription and non-prescription medicines and drugs that qualify still continue to be taxed at the rate of 1%. The updated sales tax forms, we went over the ST1 before, but the ST1 and the ST2, which accompanies the ST1 for multiple sites, if you have different sites to claim the tax for, and then the amended returns, the ST1X and the ST2X, have added the lines we discussed at the beginning of my presentation. So when you electronically file using MyTax Illinois at mytax.illinois.gov, the corrected Form ST1 revision will populate for the selected reporting period. Okay, destination-based sales. And the question is, will these grocery tax changes impact retailers who make destination-based sales? Yes. So just like they currently do for sales to the Regional Transportation Authority or the Metro East Transit District locations, retailers making destination-based sales of groceries to locations in municipalities or counties imposing a local grocery tax will be required to collect and remit the grocery tax. And for questions, see PIO 119, Grocery Receipts Reporting on Form ST1 and Form ST2 chart for instructions. And then will the local grocery tax in the Regional Transit Authority and the MED locations remain in place? So yes, the current local tax on sales of grocery food that made at a location within the RTA or MED has not been eliminated under Public Act 103-0781. Retailers will, however, report grocery sales on a new line on the tax return. See PIO 119, Grocery Receipts Reporting on Form ST1 and Form ST2 chart for instructions. And then destination-based sales. The question is, if the municipality or county imposes their own 1% local grocery tax by ordinance effective January 1st, 2026, will my grocery tax rate change? And the answer is no. It's just putting back the 1% that was taken away. So if the 1% grocery tax is implemented by the municipality or by the county in the unincorporated area of the county in which your business is located, the grocery tax will remain the same. The only change will be the line on the tax return on which you report the grocery taxes, and that's on that PIO 119. How will I know if the municipality or county is imposing their own 1% local grocery tax by ordinance? So the Department of Revenue will notify retailers located in a municipality or county that is imposing the 1% local grocery tax with an informational bulletin via MyTax Illinois messaging or a physical mailing. To verify your combined sales tax rate, which includes the state and local sales taxes, visit the MyTax Illinois Tax Rate Finder at mytax.illinois.gov and select the rates for January 2026. And this is the PIO 119. So you look at the chart and ask the question. So did your rates change in your area? And this is what you do. You followed the instructions for the ST1 if they did change, and if they didn't change, you follow the instructions there on the second row. Next, we're going to talk about the retailer's occupation tax guidance for out-of-state retailers and certain Illinois retailers. And this was effective January 1st of 2025, so this has been in effect for this year. So effective January 1st, 2025, Public Act 103-983 amends the Retailer's Occupation Tax Act to require that all retail sales sourced outside of Illinois and made to Illinois customers by retailers with nexus to Illinois are subject to destination-based retailer's occupation tax. We have an informational bulletin that covers this. It's FY 2025-10, and it's titled Retailer's Occupation Tax Guidance for Out-of-State Retailers and Certain Illinois Retailers, effective January 1st, 2025. This change affects retailers with any kind of physical presence in Illinois who make sales that are sourced outside of this state to Illinois customers. For these types of sales, tax must be collected at the destination-based rate in effect at the time of sale. Destination-based rate means the total state and local retailer's occupation tax rate calculated for a sale using the rate in effect at the Illinois location to which the tangible personal property is shipped or delivered, or at which possession is taken by the purchaser. Next, we'll talk about Illinois sales and use tax applies to leased or rented tangible personal property. And this was effective January 1st, 2025. Public Act 103-592 amends the Retailer's Occupation Tax Act, the Use Tax Act, the Service Occupation Tax Act, and the Service Use Tax Act to make lease transactions subject to Illinois sales and use tax laws. And we have this fiscal year bulletin to help answer questions. It's titled Illinois Sales and Use Tax Applies to Leased or Rented Tangible Personal Property. It's FY-2025-15. This provides that a lease of tangible personal property is considered to be a sale at retail. You must register as a retailer with the Illinois Department of Revenue if, in the ordinary course of your business, you regularly lease, offer to lease, or arrange for the leasing of merchandise. Illinois sales and use tax applies to leased or rented tangible personal property. They're all subject to the provisions of Public Act 103-592. On and after January 1st, 2025, the term sale, as used in the Retail Occupation Tax Act, includes a lease. So Illinois sales and use tax applies to leased or rented tangible personal property, but it does not affect or make any changes to the way vehicles, aircraft, watercraft, and vehicles are leased. we already had a leasing program in place and nothing has changed there. Oh, a lease transaction, the difference between a lease and a rental purchase agreement. A lease transaction generally does not permit the consumer to become the owner of the merchandise. A lease is a transfer of the possession or control of, the right to possess or control, or a license to use, but not title to, tangible personal property for a fixed or indeterminate term for consideration, regardless of the name by which the transaction is called. A rental purchase agreement, or sometimes called a rent-to-own agreement, is an agreement for the use of merchandise by a consumer for personal, family, or household purposes for an initial period of 4 months or less, that is automatically renewable with each payment after the initial period, and that permits the consumer to become the owner of the merchandise. What receipts from a rental or lease transaction are subject to tax? The lessor, the owner of the property, must remit for each tax return period only the tax applicable to that part of the selling price actually received during such tax return period. The selling price with regard to a rental or lease is the same as with a retail sale. The consideration for a sale, valued in money, whether received in money or otherwise, including cash, credits, property, and services. And the question is, are existing contracts for lease or rental entered into prior to January 21st subject to tax? Yes. The tax is imposed on all gross receipts received under a lease or rental contract on or after January 1st, 2025. While the tax does not apply to any of these receipts received before January 1st, 2025, any amounts received on or after January 1st, 2025 are subject to the tax, including amounts received on contracts with current customers that were in place before January 1st, 2025. And are leases and rentals of computer software subject to the tax? In most cases, leases and rentals of computer software are not subject to the leasing tax if it meets all of the following requirements. The lease or rental is evidenced by a written agreement signed by the licensor and the customer. The written agreement must restrict the customer's duplication and use of the software. The licensor must have a policy of providing another copy at minimal or no charge if the customer loses or damages the software, of permitting the licensee to make of permitting the licensee to make and keep an archival copy. And this policy must either be stated in the license agreement, be supported by the licensor's books and records, or be supported by a notarized statement made under penalties of perjury by the licensor. The written agreement prohibits the customer from licensing, sublicensing, or transferring the software to a third party without the permission and continued control of the licensor. And the customer is required to destroy or return all copies of the software to the licensor at the end of the license period. And this is all covered under the Fiscal Year Bulletin 2025-15. And here's a summary of the computer software list that makes them not taxable. So if the written agreement does all of the following, it must be signed by the licensor and the customer, it must restrict duplication and use of the software, has a notarized statement agreeing to replace lost or damaged software, it prohibits customers from licensing and sublicensing the software, and it requires the customer to destroy or return all copies of the software at the end of the lease. And for leases and rentals of most tangible personal property, how do I pay the tax due? So receipts for the leases and rentals of personal property are reported on the Form ST1, Sales and Use Tax, and E911 Surcharge Return. So you use mytax.illinois.gov, which is the easiest way to file. Next, we have the undetermined location tax assessment. So for sales sourced under this act to Illinois location to which the tangible personal property is shipped or delivered, or which possession is taken by the purchaser, if the taxpayer fails to provide the information, schedules, or supporting documents necessary to determine such location, the department shall, in lieu of imposing a penalty for an unprocessable return under the Uniform Penalty and Interest Act, assess tax on the gross receipts of such sales at the rate of 15%. So if an ST1 is submitted and the delivery location of where the items were shipped is not reported on the ST2, there will be a 15% penalty assessed. The goal is to get businesses to provide the proper information. The updated ST1 instructions will include the following statements. Reminder, for destination-based transactions, supporting documents must include the full name and street address for each delivery. General information on requirements for the books and records that must be kept for your business on our website are in Publication 113, Retailer's Overview of Sales and Use Tax, Prepaid Wireless, E911 Surcharge, and Illinois Telecommunications Access Corporation, or ITAC, Assessment in the Keeping Complete and Accurate Records section. Okay. Next, we have changes related to motor vehicle transactions for automobile dealers. Public Act 104-0006 amends the Retailer's Occupation Tax Act, the Use Tax Act, the Service Occupation Tax Act, and the Service Use Tax Act, and the Illinois Vehicle Code to add that the non-resident purchaser, or a vehicle sold with a drive-away permit, the exemption claimed on Form ST556 and ST556 LSE for leases does not apply to transactions where the purchaser is a limited liability company and a member of the LLC is a resident of Illinois, and that's effective June 16th, 2025. Provide that motor vehicles purchased for resale from a private party, non-retailers, by retailers registered under Section 2A of the Retailer's Occupation Tax Act are exempt from the Private Party Vehicle Use Tax Act, effective June 16th of 2025, and to change the rolling stock exemption for limousines to exclude vehicles subject to the provisions of the Transportation Network Providers Act. Okay. Public Act 104-0006 adds a presumption that the exemption for a motor vehicle that is sold in Illinois to a non-resident where the vehicle is not titled in Illinois does not apply if the purchaser is a non-resident LLC and a member of the LLC is a resident of Illinois. Note, a purchasing non-resident LLC with a member who is a resident of Illinois may rebut the presumption that the exemption does not apply by providing evidence, such as proof the item is insured for primary use at an address outside of Illinois, or proof that the item will be permanently stored or garaged at a physical address out of Illinois, to their selling retailer to properly claim the non-resident purchaser exemption. A private party vehicle use tax is imposed on the privilege of using in Illinois any motor vehicle acquired in a non-retail transaction by gift, transfer, or purchase. And Public Act 104-0006 clarifies that if you are registered under Section 2A of the Retailer's Occupation Tax Act as a retailer of motor vehicles, when you purchase a motor vehicle from a private party for the purpose of resale, you are exempt from the private party vehicle use tax. This does not change the fact that when the vehicle is sold at retail, the registered retailer owes retailer's occupation tax on that sale. Also, on and after July 1st, 2025, Public Act 104-0006 provides that the rolling stock exemption for limousine applies only if those limousines are not used to provide transportation network company services as defined in the transportation network policies, or providers, I'm sorry. A transportation network company, also known as a rideshare service, is an entity operating in this state that uses a digital network or software application service to connect passengers to transportation network company services provided by transportation network company drivers who typically use their private vehicles to provide the rideshare service. So this is saying that limousines cannot use their exemptions, if the rolling stock exemption, if they are used in a rideshare service like Lyft, Uber, that sort of thing. Okay, when sales for service are liable for retailer's occupation tax? When tangible personal property is transferred as part of the rental of space or as part of providing an amusement, tax is due. The tax owed and the method to calculate the tax depends on two factors: whether the tangible personal property is the true object of the transaction, and how the tangible personal property is invoiced in the transaction. Here are some examples. So let's talk about banquet room rentals. And there's more information, or all of this information came from Administrative Code 130.2145. So if the true object of the transaction is the rental of the room, and if food or beverages are provided incidentally to the rental of the room, no tax is incurred on the charges for the rental of the room. If no separate charge is made under the contract for the incidental amount of food or beverages provided, the renter or the owner of the facility is considered to be the user of the food or beverages and incurs use tax on its cost price of the food or beverages transferred incidentally to the rental of the room. The renter incurs retailer's occupation tax on the selling price of the food or beverages. So if a banquet room is rented just for the space, and the renter just wants to use the rentee just wants to use the room for a meeting, and then the owner of the space provides food at no charge, there would not be tax to the people using the meeting space on the food, but the owner of the facility would be required to pay use tax on that food served. If the true object of the transaction is the sale of food or beverages, the rental of the room in these circumstances is considered an inseparable link in the sale of the food and beverages to the customer and is not merely incidental to the seller's business of selling food or beverages. Therefore, charges for the room rentals are incurred in the seller's taxable gross receipts. If alcoholic beverages are either provided or sold by the renter to the persons attending the event for which the room is rented, the true object of the transaction will always be deemed to be the sale of food or beverages and not the rental of the room. So tax would be charged on the rental of the room. The golf cart rental. And this is Park District leases, includes golf carts with motors or pull carts, fishing poles or ice skates rented for a program, the red wagon rented during a visit to the Peoria Zoo to help a caregiver navigate the zoo with small children, a bucket of golf balls used at a driving range. All of these rentals are now taxable sales, and sales tax must be collected as there is a distinct item of tangible personal property that is under the control of the lessee for the duration of the lease or rental. Retailer's occupation tax must be collected and reported on Form ST1 and broken out by taxing district location like any other sale. Then we talk about golf simulator rentals at clubs. And the first instance is if the true object of the transaction is the renter of the simulator, and if food or beverages are provided incidentally to the rental of the simulator, no tax is incurred on the charges for the rental of the room, and the owner of the facility pays tax on the food distributed, kind of like the banquet room that we just talked about. If the true object of the transaction is the sale of food or beverages, charges for the room rental are included in the seller's taxable gross receipts, and tax is collected and remitted to the Illinois Department of Revenue by the owner. If alcoholic beverages are either provided or sold by the renter or owner, the true object of the transaction will always be deemed the sale of food or beverages and not the rental of the room. The owner must collect and remit sales taxes to the Illinois Department of Revenue. Okay. Which sales tax rate applies to rentals under the new lease law? And we have Administrative Code 130.2010 to look this up. And the retail occupation tax provides that to determine the tax rate for lease transactions, the lease receipts shall be sourced as follows. For a lease that requires recurring periodic payments and for which the property is delivered to the lessee by the lessor, each periodic payment is sourced to the primary property location for each period covered by the payment. The primary property location shall be as indicated by an address for the property provided by the lessee that is available to the lessor from its records maintained in the ordinary course of business when the use of this address does not constitute bad faith. For all other leases, including a lease that does not require recurring periodic payments, and any lease for which the lessee takes possession of the property at the lessor's place of business, the payment is sourced as otherwise provided under the ROT Act for sales at retail other than leases. And here's another way to look up the tax rate in your area to make sure you have the correct rate. So we look up our tax rate database. So here's our website. And you go to our website, which is tax.illinois.gov. And then at the box in the very bottom, that's navy blue and has a red box around it, we have this quick links, which I've broken out to the right-hand side of the slide. So under quick links, at the very, very bottom, we have tax rate database. You go to tax.illinois.gov, quick links, and click on tax rate database. So then it will bring up this page, and the first indentation is My Tax Illinois Tax Rate Finder. So you click there, and the next option is to search by address or local government. Local governments work a lot of the times, but in some of the cities around Chicago, there are quite a few counties in one city, so you might want to search by the address of your business to get the tax rate for that spot. Okay, in this, we're searching by local government. You enter the date of sale, the name of the city, and then enter search. Okay, so I put the city of Springfield, and this is what came up. First, it shows me the local government. The county is Sangamon County. The location code, which I should have on my ST2 when I'm filing my taxes, and the rate as of that date. And then these aren't colorized on your screen when you're looking it up on the tax rate database, but for our purposes, in Springfield, the general merchandise rate is at 9.75%. So that's everything other than the qualified drugs and the groceries. And then we have qualifying food and drugs, which will eventually say qualifying drugs because the food is a separate rate. And then if there is a grocery tax rate in your area, that will show up. And then next we have the vehicle sales tax rate. Okay. And then if you want to know what this 9.75 tax rate is comprised of, you can click right on that 9.75% and you have the rate breakdown at the bottom and it tells you what each portion is. So we have the county school facility tax of 1%, the home rule use tax of 2.5%, and then the state tax that everyone is required to submit of the 6.25%. Illinois sales tax rates range from 6.25% to 11%. And so the state sales tax rate is always the 6.25%. Your municipality or city or county may have additional rates which could raise it. So the range ranges from the 6.25% in an area where you would only be paying the state rate up to 11%. Membership fees. If there are questions about membership fees, that's addressed in Administrative Code 130.401 and under D, the section D. Membership fees are not gross receipts from the sale of tangible personal property. Membership fees are gross receipts received in exchange for something intangible. For example, when membership fees buy purchasers the right to purchase products at wholesale, but are not applied to the purchase price of tangible personal property, they are not subject to sales tax. Like those big box stores that you have to pay a membership fee every year to be able to shop there. However, when membership fees represent the sale of tangible personal property, they are subject to tax. For example, if a country club charges a member $100 each month as a minimum charge for food services at the club, but the member only consumes $75 worth of food in a particular month, tax is due on the $75. Okay, taxability of member event sales, and that's at Administrative Code 130.2005. So examples of nonprofit service organizations are nonprofit country clubs, boat clubs, employees clubs or organizations, and other nonprofit social, athletic, or recreational organizations, lodges, patriotic organizations, fraternities, sororities, professional and trade associations, civic organizations, labor unions, and other nonprofit persons who are not exclusively charitable, religious, or educational organizations. Nonprofit clubs are liable for retailers' occupation tax when selling tangible personal property at retail to members, guests, or others. The same is true of exclusively charitable, religious, or educational organizations with certain limited exceptions. There are still some very limited exemptions from retailers' occupation tax for sales by exclusively charitable, religious, and educational organizations and institutions. The limited exceptions available for not-for-profit organizations described in Administrative Code 130.2005 include sales to members, non-competitive sales, and occasional dinners and similar activities. The first exception is that sales by such an organization are not taxable if they are made to the organization's members, to its students in the case of a school, or to its patients in the case of a nonprofit hospital that qualifies as a charitable institution, primarily for the purpose of the selling organization. Examples of sales that come under this exemption are sales of uniforms, insignia, and scouting equipment by the Scout organizations to their members, sales of Bibles by a church to its members, and sales of choir robes by a church to the members of the church's choir. The selling organization would incur retailer's occupation tax liability if it should engage in selling any of the foregoing items at retail to the public. School books sold to students are taxable. Sales of meals within charitable organizations must not be for profit or must be not for profit. A church or religious organization does not incur retailer's occupation tax liability on its receipts from sales of meals when the following conditions are met. The profits, if any, are used for religious purposes. The meals are confined to the members of such church and their guests and are not open to the public, and the serving of meals is connected with some religious service or function. Under the circumstances just described, even if this type of selling of meals is done rather frequently, it is exempt under the Act because it is categorized as sales to members, primarily for the purpose of the religious organization or the seller. The second exception is non-competitive sales. The second exception is the sales by exclusively charitable, religious, or educational organizations are not taxable if it can be said that such selling is non-competitive with business establishments. The Attorney General has laid down the following tests for determining that such selling is non-competitive. The transactions are conducted by members of the charitable entity and not by any franchisee or licensee. All of the proceeds must go to the charity. The transaction must not be a continuing one, but rather should be held either annually or a reasonably small number of times within the year. The test of reasonableness would be an administrative decision to be made by the department. The reasonable ascertainable dominant motive of most transferees of the item sold must be the making of a charitable contribution, with the transfer of property being merely incidental and secondary to the dominant purpose of making a gift to the charity. Under the second exception, examples of exempt sales are infrequent sales of cookies, donuts, candy, calendars, or Christmas trees by Scout organizations, by other exclusively charitable organizations, or by exclusively religious organizations. In this category, the Attorney General's opinion stresses that the sale must be infrequent and that the dominant motive of the purchase must be the making of a donation to the charitable or religious organization that conducts the sale rather than the acquisition of property. Even if the sale to the public occurs only once a year, the charitable or religious organization that conducts the sale incurs retailer's occupation tax liability if it sells hats, greeting cards, or other items for which the dominant motive of that purchase is the acquisition of property rather than the exchange of property merely as a token for making a donation. And then the third exception is occasional dinners and similar activities. The third exception is that occasional dinners, socials, or other similar activities conducted by exclusively charitable, religious, or educational organizations or institutions are not taxable, whether or not such activities are open to the public. This exemption extends to occasional dinners, ice cream socials, fun fairs, carnivals, rummage sales, bazaars, bake sales, and the like, when conducted by exclusively charitable, religious, or educational organizations or institutions, whether the items that are sold are purchased or donated for the purposes of the sale, even if the sale is open to the public. This exemption does not extend to occasional sales by exclusively charitable, religious, or educational organizations or institutions of hats, greeting cards, cookbooks, flag kits, and other similar items, because these are not occasional dinners, socials, or similar activities within the meaning of the Act. And the selling of these kinds of items at retail, even on an occasional basis, does not generally place the selling organization in substantial competition with business establishments. Sales tax on gratuities or tips. And that's Administrative Code 130.120R. The tax does not apply to gross receipts from sales of services included in gross receipts that are designated as mandatory service charge by vendors of meals, to the extent that the proceeds of the service charge are in fact turned over to the employees who would normally have received tips had the service charge policy not been introduced. Does not matter if the mandatory gratuity is added to the banquet or dinner checks in the form of a percentage of the total bill or as a flat rate, to the extent that the proceeds of the service charge are in fact turned over as tips or as a substitute for tips to the employees who participate directly in preparing, serving, hosting, or cleaning up the food or beverage function with respect to which the service charge is imposed. Service charges that are used to fund or pay wages, labor costs, employee benefits, or employer costs of doing business are taxable for gross receipts. And we have Administrative Codes 130.120, Section R, and 130.2145, Section D. Sales tax on sales of service. Installation, alteration, and special service charges. And these administrative codes are 130.120, 130.450, 130.2145. So on the 130.120, non-taxable transactions. Intangibles, real property, sales for resale, sales of service, occasional sales, newspapers and magazines, sales to charitable organizations, governmental bodies, rolling stock, motor vehicles not titled in Illinois, vending machine sales of 50 cents or less, food for the federal nutrition program for the elderly, sales of farm chemicals, equipment used primarily in process of manufacturing and assembling, mandatory service charges turned over to employees as tips, graphic arts machinery and equipment, motor vehicles used in automobile rental. So those are all non-taxable transactions. And this is 130.450. When such tangible personal property is installed or altered for the purchaser by the seller, or some other special service is performed for the purchaser by the seller with respect to such property, the gross receipts of the seller on account of this charge for such installation, alteration, or other special service must be included in the receipts by which his retailer's occupation tax liability is measured, even if separately stated on the invoice. And then this is installation, alteration, special service charges, still 130.450. If such charge is a service charge separately contracted for, it need not be included in the figure upon which the seller computes his retailer's occupation tax. Vendors of meals. When members of an organization meet at a hotel, restaurant, or other place of business where food or drinks are sold and pay for those items, the hotel or other vendor of meals is considered the seller of such tangible personal property directly to members as users or consumers. The sales are taxable.